Once in a while, a story comes around that's so intriguing, it seems like it's straight out of a Hollywood script. This is the tale of Ken Griffin, the man behind one of the most profitable hedge funds ever. It's a story of brains, big bucks, and the bold maneuvers of a financial wizard. Let's dive into this roller coaster ride of money, power, and market mastery. Back in 2020, a seemingly unremarkable post popped up on Reddit. But it was a game changer. It suggested a way for the average Joe to hit the jackpot while big shot hedge funds lost billions. The plan? Simple. Invest in a failing company's stock. The internet community joined forces, and their plan worked like a charm. Hedge funds were hemorrhaging money. For a brief moment, it looked like the little guys were winning. But then things got weird. The most popular trading app, ironically named Robinhood, put a stop to buying that very stock. Chaos ensued, and everyone was asking, "Who's the puppet master here?" All fingers pointed to one man, Ken Griffin. Griffin isn't just any hedge fund manager. He's a mastermind, the brain behind Citadel, a gigantic hedge fund, and the world's largest market maker. But how does one guy get so much power to sway markets and make billions without breaking a sweat? To understand Griffin's journey, we need to rewind to October 15, 1968, in Boca Raton, Florida. Born into a well-off family, Griffin had one clear goal: to make a boatload of money. With IBM dominating the town, computers seemed like the golden ticket. By 11th grade, Griffin was already running an education software firm from his bedroom. He was a problem solver, and business was his battlefield. Fast forward to 1986. Griffin lands at Harvard, eyeing Wall Street's glittering towers. Initially dreaming of a banking career, Griffin's life took a sharp turn after reading a Forbes article. It claimed that Home Shopping Network stock was overvalued. Griffin agreed and dived into the world of put options. But his profits weren't what he expected, thanks to Wall Street's bid-ask spread. Frustrated, Griffin buried himself in financial theories. That's when he discovered the convertible bond market. Something was off with the pricing, and Griffin knew it. His curiosity led him to First Boston Corp, where he learned about strategies the big players used quietly to rake in profits. During a summer break, Griffin shared his trading theories with a broker friend. That's when Saul Goen, a wealthy retiree, overheard him and decided to invest $50,000 on the spot. With Goen's backing, Griffin raised $265,000 for his first fund, including an investment from his own grandmother. But Griffin's journey was anything but smooth. The stock market crash of 1987, known as the Monday Massacre, was a crucial test. Griffin found himself in a race against time, navigating one of Wall Street's worst crises. Griffin's ability to think differently, his knack for spotting opportunities where others saw chaos, and his relentless pursuit of success set him apart. His journey from a curious teenager to a financial titan is a testament to the power of innovation, guts, and a little bit of luck. Imagine being in college and spotting an opportunity that could change your life. That's exactly what happened to Ken Griffin. It's October 19, 1987, a day that would be etched in financial history as Black Monday. The stock market is in turmoil, plunging a staggering 22.6%, a record that still stands. Amidst this chaos, Griffin, a student at Harvard, sees a golden opportunity. But he faces a challenge. He needs real-time stock quotes to make his move, and for that, he needs a satellite dish. Harvard, however, has strict rules against students running businesses on campus. But Griffin isn't one to back down from a challenge. Through sheer determination, Griffin convinces the authorities to let him mount a satellite dish outside of his dorm window. And just like that, he's in the game, armed with live updates and a set of carefully chosen short positions. As the market spiraled, Griffin stayed calm and focused. When the dust settled, he emerged not just unscathed but victorious, making substantial gains while other hedge funds faced public losses. This triumph was the beginning of Griffin's ascent in the financial world. Investors, impressed by his savvy and success, started pouring in. Griffin's next venture, convertible hedge fund number 2, raised a whopping $750,000. His early success attracted the attention of Frank Meyer, a hedge fund pioneer who entrusted Griffin with $1 million. Griffin's performance was nothing short of spectacular, yielding a 70% return in just 1 year. The New York Times caught wind of this, and Griffin's reputation soared. With Meyer's backing, Griffin raised $4.6 million the following year, laying the foundation for his hedge fund, Citadel. Citadel wasn't just another fund. In the early 90s, the fund achieved remarkable returns, and this was a sign of Griffin's financial acumen. But Griffin's journey wasn't all smooth sailing. The early 2000s brought new challenges, notably the collapse of Enron. Griffin, ever the opportunist, seized this moment, swiftly recruiting a team of former Enron traders. By 2003, at just 34, Griffin joined the Forbes 400, boasting a net worth of $650 million. However, the mid-2000s brought storm clouds. Citadel's assets peaked at $20 billion, but the 2008 financial crisis hit hard. Citadel faced a near collapse as convertible bonds froze and assets plummeted. Griffin took a bold step by preventing investors from withdrawing their funds, but this was a move that magnified losses. By the end of 2008, Citadel's two largest funds were down 55%. Despite these challenges, Griffin was far from done. He devised a secret strategy that propelled Citadel to new heights, making it an unstoppable force in the financial world. In the year 2018, Citadel, under Ken Griffin's sharp leadership, is already a big name in the finance world. But Griffin has bigger plans. He brings in a team of top-notch scientists and analysts, capable of predicting the weather as accurately as the pros. Why? Because he's eyeing a massive expansion into the world of commodities, from futures to physical trading. This bold move is part of an ambitious plan to grow Citadel's already impressive $54 billion empire. And spoiler alert, it's going to pay off big time. But before we get to the success part, let's talk about one of Citadel's biggest challenges, the GameStop saga. In the heart of this drama is GameStop, a company struggling to keep up. Many hedge funds, expecting GameStop to go belly up, bet against its stock. They never saw what was coming. Now, a Reddit user lays out a plan to buy GameStop stock, driving up its price. As Redditors start buying, GameStop stock skyrockets, catching the hedge funds off guard. They're losing billions as the stock reaches an unbelievable $500. One of these funds, Melvin Capital, is hit so hard it needs a massive bailout from Citadel. But the plot thickens. The Robinhood trading app suddenly bans buying GameStop stock. Many suspect Ken Griffin's Citadel Securities is involved, leading to accusations of market manipulation. A congressional hearing follows, but Griffin denies all allegations. Fast forward to 2022, and the world is watching the war in Ukraine unfold. Amidst this chaos, Citadel sees an opportunity. They've been in the commodities game since 2002, so when natural gas prices go haywire, they're ready. Thanks to their expert weather forecast team, Citadel predicts demand and supply like no one else, making a jaw-dropping $16 billion profit. With this, they leapfrog Bridgewater to become the most successful hedge fund ever. But back to the GameStop story. Did Ken Griffin pull the strings behind the scenes? While Citadel maintains its innocence, the SEC is still investigating. This whole episode raises big questions about the influence of Wall Street on stock prices and the fairness of the markets for regular investors. Ken Griffin's story is one of ambition, strategy, and a hint of mystery. He's a financial mastermind, but also a figure shrouded in controversy. His actions and their consequences continue to spark debate, leaving us wondering about the real power dynamics in today's financial markets. And if you're intrigued by stories of financial wizardry, don't forget to like this video and subscribe to this channel. See you in the next one. Until then, peace.